Welcome, everybody. My name is Zach Olson, and I'm the project manager of new initiatives here at the Iowa Center. This is Small Business Essentials. We do it every Tuesday, so welcome back to those of you who are familiar. For those who aren't, I'm just going to give you a couple quick notes. One, we are recording today so that we can share this on our website. And two, if you have any questions or comments, please use the chat and the Q&A function down at the bottom of your screen. We'll stop every once in a while to answer those, and we'll have a little bit of time at the end for general Q&A. So we all know that there are a lot of ducks to put in a row in order to get your business up and running. I'm sorry, there's sirens in the background here. Those ducks take many forms: paperwork, financial statements, bureaucratic forms, planning documents, educating yourself, learning about accounting principles and lining up funding options, planning for the future, and networking, connecting with the right people to accomplish all those things if they're not in your wheelhouse. And as you check each one of these off your list, you pretty quickly realize that new ones will always pop up right behind them. So it's a lot. It can feel overwhelming, but whether you're just starting your business for the first time or you've been going for a while and you're looking towards making that next step, one thing is for certain: you're going to save yourself a lot of time, energy, and resources if you do it right the first time with your long-term goals in mind. Here today to talk about understanding that process and what you need to prioritize within is Ann Hartz. She's the founder and president of Ann Hartz CPA and Associates in Des Moines. She's a lifelong resident of Iowa. She has 27 years of accounting and tax experience. And I was like, when I get to say this, she literally wrote the book on it. Author of Straight Talk About Small Business Success in Iowa. Ann is here today to walk us through what to consider and how to set up your business to run smoothly and efficiently from day one. Ann, floor is yours.
Thank you. Well, thanks for having me today. Basically, I'm going to start right off with what I thought the structure of today is. I'm just going to kind of talk about the different business structures, which you have up here on your screen. I'm going to then go into detail for each one of those. Then the next step will be kind of when you've decided which structure you want, what that step-by-step process would be. And then finally, at the end, I'm going to kind of tell you what I feel like for tax purposes is generally the best structure. And then I will open it up to questions. So you can see up here, we've got 5 different business structure types. The first one is a sole proprietorship. This is the most common and obviously the easiest form of to just, as they say, hang your shingle out and start up your business. You don't even have to have an EIN number to be a sole proprietor. If you though are a sole proprietor and you either are going to sell products that you have to charge sales tax on, or you are going to have employees, then you would have to get an EIN number for your sole proprietor. So basically the pros to that is it's easy to form and very inexpensive. You don't have to do really anything. You could register your name with the Iowa Secretary of State's office, but that's really, a lot of people use their own name, as I have, for many years, Ann Hartz CPA, and you don't really need to register your personal name. The con is you are vulnerable legally, because if something should happen and that a client or customer were to sue you, they can basically, take everything you have personally, your home, your, savings, your retirements, those kinds of things. And also any profit that you make on a sole proprietorship is going to be subject to self-employment tax. And as I said, at the end, I'll kind of talk about what I think is the best structure for tax purposes. The next step is the partnership. The partnership is very similar to a sole proprietorship in that you don't really have to have a legal structure to be a partner. You just have to have more than one owners, and then you are considered a partnership. It's kind of the exact same thing as a sole proprietorship, except that for tax purposes, there is a separate entity, there's a separate business return, and then each partner would get a K-1 that then they report on their personal return, and any profit from the partnership would then be subject to self-employment tax. So again, the pros for that is the same as the sole proprietor. It's easy to form, easy to dissolve. And in addition to that, two heads are better than one, obviously. So you have someone else to kind of bounce ideas off of and maybe use their expertise as well. Again, the con is you're legally vulnerable, just as in the sole proprietorship, and you also, that profit is subject to self-employment tax. And just an FYI, SE tax, as I have it written here, is the same as Social Security. So that's how, as a self-employed person, you pay into the Social Security system. So that's generally 15% is what I rounded up to when you're trying to figure numbers or taxes. So then the next step is the corporation. And that is, there's two different types, obviously, of corporations. There's the CCorp and the SCorp. I'm just going to talk about them both together here. And the fact that the pro for that is that you have the legal protection, that if, again, a client or a customer should sue you for whatever reason, they can only go after the business assets, and they cannot come back on you as the owner personally and take, all of your home and your retirement. You can also raise capital by selling, shares of your corporation if it's a C Corp. The con is obviously there's formalities to setting up the corporation. Generally, you would go through an attorney to do that. And if you have losses, if you are a C Corp, the only thing you can do with a loss is carry it either forward or backward to a prior year. If it's an S Corp, you have to have, and this is kind of gets into a little bit of the nitty gritty, but what we call bases, meaning that you have to have put the money into the business that created the loss. If you don't have any of your own money into the company, then you can't take that loss, and they're just suspended until the point in time that you have a gain that you can offset those losses with. The next one is a limited liability company, and that one is the most popular, to be quite honest. And it's popular because of its flexibility. I will go into detail, a little more detail about that, but it does allow you the same legal protection as the S Corp or the C Corp, but it's much more flexible than either of those are. And the con is the same as the S Corp. You have to set this up as a legal entity, and there can be some cost involved, and there's rules. You have to have a separate bank account, just as the S Corp, and you do have to acquire an EIN number, etc. The last thing in this table is the nonprofit corporation. I'm really not going to go into detail about that. That's quite pretty involved, and this class is mostly about setting up a business for success. And not that a nonprofit can't be successful, but that's kind of a more extensive class at some point in time. But again, it is a structure. It's tax exempt, which is a pro. It does have the legal protection because it's a legal entity. Again, the con would be it's very difficult. It's much more difficult to set up than either the S Corp or the corporations of the LLCs. And you have to have a board of directors for the nonprofit. And if you as an individual want to start a nonprofit, you risk, if you get a board in there that doesn't agree with you, you could get kicked off of your own nonprofit. So sometimes that isn't always the best thing either. Okay, so next slide. So as I said, we were going to go into a little bit more detail. The sole proprietor, again, the ease of entry, no need to have an EIN number. There's only the one owner that and you make all the decisions, which is nice. You don't have to, talk to your partner or get anyone else's permission. And I spoke about this a little bit before. The losses on a Schedule C, you can take. You don't have to have basis, as I spoke about with the LLC. if you have W-2 income, or if most people who start out in business, they start out as a sole proprietor. And that's because you start small, you want to test the waters, see if it's going to work for you. So oftentimes in the early stages of a business, you will have losses. So because, maybe you're married, or maybe you are, starting this business on the side, you have W-2 income that you can take those losses against. So while you're building this business, that's a great way to, see if it's going to work for you. And then if you do have a loss, again, it will reduce the amount of taxable income you have, because it will be offset by your W-2 income. So the cons, as I spoke about, you don't have any legal protection if something should happen. And we always hope, for the best, but you can never be sure. And so you're risking, what you've built and what you have personally by having your business as a sole proprietor. And then any profit you have is subject to self-employment tax. And not to get into a lot of detail when it comes to taxes, but I've seen young children, that are 16 and 17, who are doing umpiring and things like that get a 1099. They don't make enough on that business to even owe income tax, but they still have to pay self-employment tax, which, which rounds up to about 15%. So it can be pretty, it can be shocking to a lot of people who think, well, it's no big deal, I can pay my own taxes, but they don't realize that self-employment tax is over and above income taxes. And when you are a W-2 employee, your employer matches the amount of self-employment tax or Social Security that's coming out of your W-2. So it's really more than what you would be paying as a W-2 employee when you have to pay the self-employment tax yourself. The partnership is great, but again, it's very similar to the sole proprietorship in the fact that it's very easy to start. You and someone else can go, hey, let's put this partnership together. You can do it on a verbal agreement, but you also risk getting into disagreements with partners, and sometimes it can be very tricky and very hairy if you don't have a legal entity, which would be like an LLC or an SCorp. It's very easy to set up. As I said, again, well, you do have to have an EIN number because a partnership return is a separate entity. So you'd have to file that as a separate business. And then what happens is, as I said earlier, each partner gets a K-1 that shows their share of the income or loss on that business. The nice thing of the con, as it says here, is, as I said earlier, two heads are better than one. Sometimes, maybe one person has the funds to invest, but the other person can put the sweat equity into the business and knows the trade better. And you put the two of those together, and it ends up being a good scenario. The con, again, of being a partnership is you don't have that legal protection. You obviously want to go into business with someone you can trust, and the partnership entity, that share of the business that is reported from the K-1 is also subject to the SE tax. And as I said before, is a tax that's over and above or in addition to your income tax. Okay, so now here's where I kind of split up the C-Corp versus the S-Corp. The corporation is wonderful in the fact that you are protected legally. If, again, somebody should want to sue you, they can't come back against you personally for your personal property. You can also raise capital if you have if you want to sell shares to your business. And you can have more than 100 shareholders in a C-Corp. The con is you end up with double taxation because the C-Corp itself is taxed, where an S-Corp, which we'll get into next, does not have any tax. It flows through to the personal shareholders. So a corporate rate can be anywhere from 21% to 35%. depending on where your income falls. And then as the shareholder of a C Corp, you would be paid a wage. And so then that wage gets taxed again on the personal level. So you are basically in essence getting double taxed. There is no flexibility whatsoever. Every penny, every dollar has to be accounted for. And again, you're taxed on whatever profit that that is the result of it. And here it says losses cannot offset owner's income. And as I said earlier, this doesn't flow through to the personal return. So if you end up with a loss on the C Corp, it just sits there. It doesn't benefit anyone. However, you can carry it forward or carry it back to prior years, depending on what you want to elect to do. S Corp is the most flexible between the C and the S Corp. It does allow you the legal protection. As I said, you do have, it's very flexible, much more flexible than the C Corp. You can have anywhere from 1 shareholder to 100 shareholders as an S Corp. And you save on the SC tax. And I will kind of discuss this a little bit later, but basically what that means is an S Corp has no self-employment tax. However, you are required to pay a wage to the owners or the shareholders of the S Corp. And so then you pay that self-employment tax through the wage. So the strategy in essence is if you have a profit of, let's say, 30,000, but the wage you pay the shareholder is 15, you have saved half of what you would have paid if you were a sole proprietor on that self-employment tax, because now you're paying it on the wage of 15,000 instead of 30,000. So that's a great benefit and a benefit that I feel like we recommend a lot of times. The con is there are the formalities of setting up an S election. It is also a legal entity, so you have to set it up through the Secretary of State's office to get the business started. You have to have a separate bank account. You, again, as I said before, you have to pay a wage to the shareholder, or plural if there's more than one, and you must keep track of the owner's basis. And that means when you start your business and you put money into the business, if there are more than 1 shareholders, then you need, and even if it's just 1 shareholder, you need to keep track of that. How much money have you put in yourself personally into this business? Because if, say, in the beginning, in the early stages, you have a loss, you can only take those losses up to the amount of money that you put into that business. The other thing too, with an S Corp versus a C Corp, the legal entity is set up through the Secretary of State's office, but you have to take an additional step by completing what's called a 2553 form through the IRS, which is an S election. So you're electing to have your corporation taxed as an S Corp rather than a C Corp. If you don't file that 2553, it will default to a C Corp. All right, limited liability company, LLC, which I'm sure many of you have heard of. This is very common, probably the most common entity that I see nowadays. It's been very popular probably in the last 15 to 20 years or so. It's the pros to an LLC is it's very flexible. You can be they call it a sole member LLC, which means only 1 shareholder. And if you choose to do that, you can file that personally on your personal return, just as you would a sole proprietor, but then you are entitled to that legal protection, even though it's a Schedule C. If it's a sole proprietor, you are still subject to the self-employment tax. So I'm not always keen on that plan, but that is an option to do. So you can be a sole proprietor, you can be an S Corp, you can file an LLC as an S Corp or a partnership. Obviously, if you choose not to fill out the additional form I always tell my clients that an LLC is a unique entity and that you have to tell the IRS how you want that taxed. So in order to do that, you have to fill out these special elections. If you choose or don't know that you're supposed to do that, if there's only 1 member, it defaults to a sole proprietor. If there are more than one member, then it defaults to a partnership. The con, again, is it's very similar to setting up a corporation. It has to be done through articles of incorporation, or actually a certificate of organization is what you need. And then you do it through the Secretary of State's office, and there is an expense involved. And changing ownerships of an LLC is not nearly as easy as just saying, okay, now you're going to be the owner. You have to sell your rights. You also have to have a legal document that states, okay, now John Doe is going to be the owner, or we're going to, instead of have 50-50 split, we're going to have a 25-75. But you have to have some sort of legal document that states what that change is. So I don't know if you've noticed, but in the corner I put taken from the IRS EIN application. That only pertains to the next 2 slides. I didn't realize it was showing up on all of them until just now. But I pulled this because when you go in to set up your business and you want to get an EIN number, and you put in that application that you're going to be an LLC, this is what comes up. And I thought it was very helpful. So it says, if you're choosing a limited liability company, what it is and what it is not. What it is an LLC is a structure that's allowed by state statute. It is formed by filing articles of organization with the State Secretary of State's office. The LLC must be unique in its date. There can be no more than one active LLC that's in the same name. And what you do in that case is you can go to the Secretary of State's office and pull the business database and type in a name that you have in mind, and it'll tell you whether there's somebody else that has that name or not, or if it's available. For federal tax purposes, an LLC may be treated as a partnership or a corporation, or be a disregarded entity as a separate from its owner, which just means that you are a one owner LLC, and that's the situation in which you would just file it as a sole proprietor. An LLC can have 2 or more members, as I said before, and in that case, you are defaulting to be a partnership, or just one member, which is a single member. An LLC can have an unlimited number of members, and an LLC's members may include individuals, corporations, other LLCs, or foreign entities. So that's why, as I mentioned earlier, there is so much flexibility to having an LLC. What it is not, an LLC is not incorporated, and they do not file articles of incorporation. So then there's this is also a part of the EIN application, which I found interesting. So it says, due to the number of members you've implied, and this is through the application, like in this case, I said 1, it says, you are considered a single member LLC, and you will initially be classified as a disregarded entity for the purposes of filing a federal tax return. If the only member of the LLC is an individual, the LLC income and expenses are reported on a 1040 Schedule C, E, or F. So that, again, like I said, you are filing it through your personal return. If the only member of the LLC is not an individual, the LLC income and expenses are reported on the owner/member's tax return. If you do not wish to accept the default classifications of a disregarded entity, you can file, and these are the 2 forms that I mentioned earlier, in order to say, I don't want it to be a sole proprietor, I want it to be a special legal entity. The form 8832 is where you can choose which entity you would like to be. It elects whether you want to be a corporation instead of just the disregarded entity. The 2553 is the S election status, is where you're saying, I want my LLC to be taxed as an SCorp. I do want to let you know that, people get confused when they are an LLC, and then, but I'll tax it as, say, an SCorp. They don't know whether, when they're filling out a W-9, am I an LLC? Am I an SCorp? Well, you will always be an LLC. It's just for tax purposes, you are either a corporation, an SCorp, or a partnership, depending on which one of these forms you filled out. And then lastly, it says a single member LLC may not file as a partnership return. And in the same vein, if there were 2 members members instead of just one, as I had applied, indicated earlier, then you default to a partnership if you do not fill out one of these two forms. Okay, so we've talked about the different structures, and you've sat down with someone, either a tax advisor or someone that you admire as a mentor, to decide which one of those entities or structures you want to have your business. So then what do we do now? Okay, I'm thinking I don't want the Schedule C or the sole proprietorship because I feel like I don't want to be out there. I don't want to be vulnerable legally. So you've decided, let's say you want to be an LLC. As I said, an LLC is very popular. It seems to be what most people do. So now, okay, that's what I want to be. Well, what do I do? What do I do now? So this is the kind of the step-by-step process that you have to go through. So you first want to figure out a name or decide on what name you want to use. And as I said earlier, you just go to the Secretary of State's website, you go to the business entity database, and you type in the name that you have in mind, and always put LLC at the end. And then if it says nothing found, you know that it's available to use. So then you would have somebody, or you can do it yourself if you know you have to put together a certificate of organization form and fill that out and then download it. You can do it all on the Secretary of State's website, which is really fun, handy. So you get that set up, you decide on your business structure again, if it's an LLC, and then you want to form the business. And as we had spoken earlier, if it's going to be a legal entity and you want to have that protection, these are your options, either an LLC, a corporation, or a partnership. Then once you've determined which way to go, you've got that set up, you first want to do whatever you need to do through the Secretary of State's office. Then the next step is get an employee identification number, otherwise known as an EIN number. In order to do that, you just go to the IRS's website. Up in the search box, you type in EIN, and you can apply for that online. Then the next step, if you're going to be an LLC, as I mentioned earlier, the two different forms you have to fill out. If you want that LLC to be an SCorp, then you fill out the 2553. Otherwise, you can fill out the 8832. If you're going to be a corporation, then you want to file the 2553 in order to be that LLC to be considered an SCorp. You also have 75 days to file that 2553 in order for it to be timely. But there is always you can file it as a late election if you choose, if you didn't know you were supposed to do that, or nobody, oftentimes you will go to an attorney to help you set this LLC up, and an attorney's job and what they're going to advise you about is that legal protection, but they don't always have your tax situation in mind. So oftentimes they don't file it, but it's really not a big deal to file it as a late election. You just have to put a little blurb at the top of the 2553 form that states you're filing pursuant to Rev Proc blah, 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 saying that I filed it late. You do have to put a reason why it was filed late, and then just mail it in. You can also attach it to the tax return, the first tax return that you file, and file it that way. Number 7 is if you pay a wage or you're going to have to charge sales tax, you will need to have to apply for a withholding permit as well as a sales tax permit through the IRS's website, or the state of Iowa's website, excuse me. And lastly, you will take the form from the Secretary of State's office, the certificate of organization that you get, and the letter, the EIN letter, and you take those two documents to the bank to open up a bank account, because you must have a separate bank account for any legal structure as a business. Okay, that's probably my big spiel. What I said before is at the end, I would kind of tell you what we generally recommend in our office for the best structure for a business. And you could probably hear it in some of the, things that I was saying, but we almost always, if this business is going to be your primary source of income, we believe that the LLC taxed as an S-Corp is the best structure. And the reason for that is the savings on the self-employment tax, to be quite honest. As I said, a lot of times when you work as an employee or a W-2 employee, you don't realize that you're only paying, you only pay 7.5% in the self-employment tax. But once you become self-employed, you have to pay both halves, both the employer and employee share. So now you're paying 15% self-employment tax as well as income tax. So the way around it, again, to bring that number down, there is no magic bullet. You cannot eliminate self-employment tax completely, but that is the strategy is to then pay a wage, and that wage is much lower than the overall profit. So if you make 60,000 a year, your profit is 60,000 a year, you pay a wage of 30,000. So then you saved half of the self-employment tax that you would have had to pay as a sole proprietor. I thought of something, but it just escapes me now. But I guess at this point we can open it up to questions. Any questions anybody has?
I've got 3 for you.
Okay. How fast did I run through? Oh, not too bad. About what I thought.
First one, can you explain when or if one needs to have a tax exempt form?
The tax, I assume you mean the tax exempt certificate through this to the state
Yep.
of Iowa. The only time you need that is if you are reselling, if you're going to resell products, you want that certificate so that you don't have to pay sales tax on the products that you're going to resell to the end user. Then you give that certificate, that's a tax exempt certificate, to your vendor that you're purchasing those products that you're going to resell, so that they don't charge you sales tax. So that's the only situation that I'm aware of that you would use that. And you have to have a separate certificate for each vendor.
That's a good point. And what's your first step there? Where do they go first to complete that process?
You can go to the State of Iowa's website and go under business forms. What I usually do, again, in the search box, just type tax exempt certificate and you'll find it there. And you can fill it out online. You can print out blank forms and handwrite them. And if you want multiple ones, if you have multiple vendors.
Second question, are LLPs and partnerships the same thing?
No, an LLP is generally it's the same as like LLC stands for limited liability company, and LLP is limited liability professional. So it's really the same as an LLC, but it's generally a professional profession, such as I know we do some LLPs that are a group of eye doctors, or it could be CPAs, anyone who is considered in their profession, a professional. It's not the partnership is different in the fact that instead of being, as an LLP, you'd have to decide the same as an LLC if you wanted to be filed as an SCorp or a corporation or a partnership, and then fill out one of those forms to decide which way you wanted to go. It's similar in the fact that it would have multiple shareholders and or partners, but it is not the same.
Last question from the crowd is, how does a sole proprietor get a business license in Iowa?
Well, it doesn't need to have a business license in Iowa. You can get a contractor's certificate if you're going to work as a contractor, and you would get that through the Iowa Department of Revenue's website. You register your business through the Iowa Department of Revenue, and there is, or Iowa Workforce Development, I'm getting it mixed up. So the contractor's license is through Iowa Workforce Development's website, and you have to go through the registration process to get to that application. Anything else?
Wouldn't let me unmute, I'm sorry. I have one question, and I know this is a little it's more asking advice than a black or white answer. So you mentioned briefly talk to first and foremost your accountant, but also I think you said something like a trusted business advisor, something like that. Essentially, I want to know who all you'd recommend asking about these things before you get going. Like, how many cooks is too many cooks?
Oh, wow. And I'm sure in every case, you're going to get a different answer too, which is, but, I think an attorney is a good idea. I think they have, I know, I think I mentioned that you can do a lot of the stuff that attorneys do. You can do it yourself if you know how to do it. But attorneys can advise you as why it's a better idea to have an attorney do it versus do it yourself. I do know with an LLC, they like to have a, what's the word, operating agreement. And that's something an attorney has to put together. So they're a good contact. For me, I just have a business advisor that worked in the business of helping other businesses who were failing or thought they were going to go out of business. They would request the company that he worked for to come in and kind of turn it around. So I find his knowledge very helpful. So if I have questions, I will go to him. But if you can find somebody that I mean, it doesn't have to, like I said, it doesn't have to be a CPA or an accountant. Or if you know that maybe it's somebody who has a successful business already, and you can just say, hey, how did you do this? Or what do you think would be a good idea for me? Or what would be the best, or who can I go talk to? Or who do you recommend that I speak to? But it's always good to have, but like you said, you have to be objective and know, we all.
How often is this something you should revisit? I guess it seems obvious that when you make major shifts with your business, it's something that you need to think about. But if you're just plugging along with the same business model, should this be something that you consider every so often, and how often, if so?
Well, as I said, I think maybe you've started something you're working on the side, and you have a handful of clients, and you're able to kind of break even, or as a sole proprietor, you can take a lot of personal expenses as business, like your home office and things like that are a little more difficult to do when you have a business as C-Corp or an S-Corp. I think the time frame when you want to revisit, if you're a sole proprietor, whether it's time to become an S-Corp or time to set up a legal structure, is when you start having a pretty significant profit. And I usually say in the range of $10,000 to $15,000 in a year. Again, if you want to be an LLC that's taxed as an S-Corp, you have to keep in mind that you do have to pay a wage. So you have to have enough money, and have enough of a profit to pay a wage. So oftentimes I'll just say, wait until you get to that point, because there are a lot of I's to dot and T's to cross. There's things to measure and to, when you end up having a legal entity such as a partnership, an LLC, or a C-Corp, it is a separate tax return. So you have to consider, okay, now I've got to pay somebody to do not only my personal return, but my business return. Once you start doing wages, you also have to pay somebody to do the payroll returns. So you have to, the savings to set it up like that for tax purposes, in my mind, have to outweigh, you have to be, there's additional expenses, as I'm saying, to dot all those I's and cross those T's. So you want to take that into account when you're thinking about upgrading, I guess I should say, from just a Schedule C or a sole proprietor. But then always, initially when the new laws went into place in 2018, and they changed the corporate rate, they lowered the corporate rate. Well, it began to, people started thinking, well, maybe it's not such a bad idea to be a C-Corp. And so again, that's where you have to decide, how how much am I going to save? And is this going to be a long term? Is this going to stay, continue this way, or will I switch and then end up, and it's not easy to change, entities basically. But the best time to think about it, though, to be honest, is this time of year, because you want to start fresh in January if you're going to switch it up. So you want to think, it's getting to the end of the year. What do I want to do for next year? I always think it's easiest to do it starting in January. One thing too to keep in mind, which for a C-Corp or an S-Corp or the LLC, the one that you have to set up through the Secretary of State's office, if you get mid-year and you're a sole proprietor and you're trucking along and doing a lot better than you thought you were going to do, and you all of a sudden think, I wish I would have done that, LLC to start with, you cannot go retroactive. It's you have to, you can either start from today if you go in there and set it up, or you can move forward. Like you could go in there today and say, I want it to be starting January 1st, but you cannot go retroactive. So that is something to keep in mind, that, you might want to start it right out of the gate, the right way.
If you change your business name, what do you need to do with your LLC paperwork?
Well, usually what I tell people to do is just you can go into the Secretary of State's office and or their website and do a fictitious name, which is, basically a DBA. It costs $5 to do that. So then you can keep your LLC or the name that you had initially, but just operate your business as a DBA. That's the easiest way. Otherwise, you just have to set up a new entity.
I know it's hard to give advice on for a specific client, knowing much about them, but we have a question that came through. Is a sole proprietor a good way to begin when starting something like an online clothing boutique? I know you can't expressly give an answer on that, but like pros and cons of that come to mind right away.
The biggest con that you're going to run into is if down the road you choose, you just as I said, you start doing really well and you think, wow, I wish I would have had the LLC to start. The biggest downfall you're going to have is you're going to have to, with a boutique like that, you are going to have a sales tax permit. So you're going to have to apply for a sales, get your EIN number and apply for a sales tax permit as a sole proprietor. And then if midstream you want to flip, you're going to have to get a new number and a new EIN number and a new sales tax permit. And the problem with that, or what you will run into, is it gets confusing to the state of Iowa when you are putting in your when you're filing those returns. You get to the point where you think it's I'm sorry, I was distracted. Somebody was coming in, but what happens is you need to cancel that first one, because what happens is people don't do that, and then you end up, paying the sales tax on the wrong sales tax permit. It gets confusing. So again, as long as you do it, you're careful and you make sure you cancel the original one, it shouldn't be too big of a deal. But that's the biggest thing, conflict that I can see you would run into.
What's one general thing you experience with your clients that would be maybe a lesson learned opportunity for most people to take away?
Well, I think we kind of talked about one of them is not, I feel like it's a tough, we all go into business for what we want and what we love to do. But we're, the unknown is kind of scary. And so you don't know, is it going to work? Is it not? So we tread lightly. And again, we start out as a Schedule C as a sole proprietor because it's the easiest one and you don't have to get an EIN number. But then you're, say into September, and all of a sudden I have someone come in my office that says, hey, I've been, what should I do? Should I, how do I pay in my taxes? Because another thing is you pay, as a sole proprietor, you pay estimated payments. But if you are an S-Corp or an LLC that's taxed as an S-Corp, you can do that through your wage. Well, so now I'm looking at it thinking, ugh, you're going to owe a lot of tax because you've made great money, which is great. But if you would have just set this up in the beginning, and so that's why I feel like a lot of times people are afraid to jump in with both feet, but it doesn't, you're out the fee to set up that LLC, obviously, if it doesn't work out. But if it does, it's going to be your best savings for tax purposes for sure. So that's the biggest, I feel like, because like I said, you can't go retroactive. We can't go, oh, let's start it now and say it's, started in January 1st of this year. You have to just go with, well, at least let's start today. Well, if you did it in September, now we have to do a sole proprietor from January through September, and then do the LLC, the SCorp for the last 3 months of the year. And it just isn't as great of a benefit to do it that way. I mean, it's possible, and we do it all the time, but that's where I hear the most, is that they've done it by themselves or on their own, and it's a great problem because they're doing well, but it would have been great if they would have come in the beginning, before they started.
A good problem to have, but still one that can be avoided, right?
You start with books, keep good records, because that's enough. People kind of fly by the seat of their pants, and they just look at their bank balance and say, well, I have some money in there, I'm doing okay. And if you don't have a map, if you're going on a trip, you easily get lost, and you need those financials. You need that profit and loss in particular to be able to use as a tool. Like, how am I doing even from month to month? Hey, I've grown each month, exponentially or whatever. If you don't have that, you're just kind of treading water, and you can't be nearly as successful.
Very well said. I've got 2 more questions for you, if that's okay.
That's fine.
First one is another one from the group. Is it a standard fee to set up an LLC, or does it vary significantly?
If you do it on your own, it's just $50 through the Secretary of State's website. It doesn't vary at all.
Okay, last question. Before we say goodbye, what would be the final piece of advice you have for the entrepreneurs that are listening?
I feel like if someone had told me, just stick with it. It's not easy. It's not easy. I think I'll go into business because you supposedly get to set your own hours, and nobody can boss you around. And what you find out is you work a lot more hours than you did when you were a W-2 employee, and your customers are your boss, and so you do whatever you can to keep your customers happy. But be persistent, and if it's really your dream to be your own boss, then you do whatever you have to do to keep that business going. And in my case, I'm primarily, or I started out as just a tax preparer. So during the off season, I would work temp jobs to keep my bills paid until I could build it up to where it supported me year round. And I think you have to be willing to do that. And don't expect it to just, and it happens, it does, and it's a great thing, but it takes a lot of work and persistence to build a successful business. It's not an overnight thing.
And if you're getting into it because you thought you'd work less,
exactly,
probably wasn't the right
that
fit
is
anymore.
not, at all. And like I said, when I would temp during the off season, then I would work, what I had to do for my business on the evenings and weekends. So now you work a lot more. And then even now, now that I support myself solely by my business, I still work a lot more hours than 40 hours a week generally, particularly during tax season.
Okay, I think that's it for questions. Ann Hartz, thank you so much for being here with us today. Fantastic information. I want to remind everybody that we'll send out, my colleague Ben Schultz will be sending out a follow-up email, a couple of resources discussed in here. I hope everybody took a picture or copied down the step-by-step process slide that Ann had today, because that was so incredibly helpful. A reminder that we do this every Tuesday, so hopefully we'll see you back here next Tuesday. We also have a lot of brand new classes starting soon, so check out our catalog and get in contact with anybody at the Iowa Center if you have questions. Until next time, Ann, thanks again for being with us. Thanks for everybody that showed up, and everybody have a great day.